Thanks for tuning in. You're watching a brand new show of Markets Tomorrow.
Hi everyone. Let's start off by telling you about our three experts. They'll be joining us over the next 30 minutes. Anup Bagchi, CEO and Managing Director at ICI Securities. Nitin Raheja, CIO, AQF Advisors. And Sandeep Wagle, Founder and MD at Apta Technical Advisory Services. Just going to, in fact, start off, Nitin, with you. With respect to the overall, assembly results, you did have the markets which cheered the state poll results, but assuming that the state results will not perhaps translate into a win for the general elections, how do you see the equity markets panning out?
No, I think, you see, the equity markets have clearly entered into a phase of optimism and hope. And, if you really also look at the way equity markets have behaved in the past, you'll probably see that in 7 out of 8 times there has been a pre-election rally, which has been averaging anywhere between 15 to 20%, and so on and so forth. So I think we are pretty much in that phase where there is an optimism. That coupled, and that optimism, along with the fact that there is this virtuous liquidity cycle that is playing out, has meant that, so while your fundamentals yet do not show signs of, completely recovery, or at least there are some, they're just kind of showing signs of bottoming out. So the market is now in, kind of in a phase where it's ignoring any further negative news that is coming out and so on and so forth, in the hope that, the worst possibly in the economy is behind, we might have a change of government, and so on and so forth. But, at the same time, one cannot ignore the fact that this is a liquidity-driven rally. The Fed taper is going to happen. It's a question of when and not will, and so on and so forth. So, that all these things will continue to act as some sort of an overhang on the upside. So just as Nikunj talked about it some time ago, you are going to be, creating some sort of a new range which will break the highs, and but it's not going to significantly see the market run away.
Sandeep, how would you assess this week's price action? We had a grand start on Monday, a great gap up start, but we are nowhere close to that now.
Good evening, Nikunj. I think it is not fair to expect that every day we move up by 100, 150 points. That doesn't happen. We have clearly crossed the prior high. Yes, we have come down on a correction. So that is absolutely okay. I mean, the structure or the pattern, what I am seeing, it's making a very clear higher top, higher bottom in the weekly charts, even the monthly charts. So yes, can't rule out a 100 point, 120 point downside from the top. From a 6400 level, we are near 6300, probably can go down by another 40, 50 points. As long as 6150, 6180 is not broken, I would maintain my view, and I really don't think that we should be in a hurry to take off. We will spend some time between 6200 and 6400 and then probably take off. And I would still say that the trend is very clearly up. There are individual stocks which are ready to take off, and I really don't think that we should talk of being bearish. Yes, we can talk of being corrective. At higher levels, some profit booking has been witnessed. That is what I would say. So as far as I am concerned, I am a buyer at lower levels. Until 6150 is not broken on the downside, I would continue to do so.
Anup, what about you? Do you think the bulk of the political adjustment is already in the price?
I think the basic sort of factors still remain the same, the underlying factors, which is currency, which is global, growth, taper, or whatever you call it. Third, I'll say that, good agricultural surprise, positive surprise of that. And in some sectors, certainly competitive intensity, which seems to be reducing in some sectors, certainly. I think these are the four factors which ultimately it will come on to that. I think on the assembly elections, I think one bit of euphoria is over, so we saw a brief rally. And that is what we had also said, that there will be a brief rally. But ultimately, I see that on the ground, I think things are improving. I think mood is certainly turning positive. And we certainly see that, from here, the markets will be well supported, and it could, move up towards, as we move on to our main elections, general elections.
Nitin, where would you like to draw the big line for cyclicals, because cyclicals surely in last 2 days have come off quite a bit. Do you think the current corrective rally in cyclicals is more like an entry opportunity? It is more like an opportunity dip buy should use to their advantage?
Well, I think, Nikunj, they have corrected, but let's not forget they've also had a substantial rally from the downsides. And so I would yet want to stick with companies which have more visibility on earnings, despite this whole rally that we've seen in cyclicals. Because I'm not seeing on the ground signals yet, even in the near future, if you talk of the next quarter or two, for a change, significant change as far as the fundamentals are concerned.
Okay, let's look at the stock of the day, and the stock of the day clearly has to be Tata Motors. Tata Motors corrected today on good old concerns that increased capex could have impact on the return ratios. They are looking at expanding in key markets like Brazil, and the problem with that expansion is that in the near term it's going to create pressure on cash flow. So it could be a good strategy, it could have long-term benefits for Tata Motors per se, but the problem with markets is that they always have a view for a quarter, at max 2 quarters, and because of this capex for FY15 the numbers clearly will be under stress. Nitin, do you think Tata Motors is doing all the right things by expanding into other emerging markets? Our understanding is that they've got serious plans to move into Brazil.
Well, I mean, clearly it is. It's a sign that they are, very clearly trying to diversify, and obviously now they've seen the benefits of the diversification that JLR acquisition has shown them across various geographies, and it has shown them that even at the worst time, in a normal time, you would have seen that we have seen Tata Motors being highly cyclical, and you've seen this whole the whole economies of scale play out for them both ways, in terms of high profitability and getting into high losses. So clearly I think they are seeing that impact, and in that sense it's broad-based its earnings, it's made it more robust as a company, I think. And so its move going into other emerging markets is, I think, just an extension of what we have seen Tata Motors doing in the last few years, and doing it successfully.
In the meantime, NTPC, that was a stock which was clearly in focus after being badgered. You did see some amount of recovery coming in, some clarifications from the management as well on CERC order being beneficial for the company. But Anup, as a house, you track this stock. What do you make of the kind of volatile moves we've seen?
No, yesterday we had come out with a note. I think it is a good buy on dips. I think it, there's a good probability that it will get diluted. It is. Certainly, there is a good chances that it will get diluted. I think it's a good buy on dips, because fundamentally it's still a very solid sound company, and to that extent I think if there is a correction and deep correction, I think it should be bought.
Sandeep, what do you make of today's intraday volatility in ICICI Bank? ICICI Bank has been a leader. It corrected yesterday, but it recovered today. Do you think ICICI Bank is on course to add another 100 rupees? Do you think soon it could be a 1250 or a 1275 kind of in stock?
Oh yes, Nikunj, at a level of 1150-60, you can see a 20, 30, 40 point correction in case the Nifty is weak or falls by 30, 40 points. But I think that it should be bought into. The trend for the short term as well as the medium term, according to me, is positive, clearly making a higher top, higher bottom in the weekly charts. So I won't be surprised if probably not 1250 but 1230, which is the prior swing high, and if it can take that out, 1250 is also easily possible. Give it some more time. I think I would bet on that.
Nitin, what would you do with the overall banking space when it comes to the fundamentals? Because while there are lots of factors that could work in its favor, including the fact that, results could now improve on account of economic recovery, the NPA issues are just not slipping away from minds of investors. But is all of this already in the price?
I think you saw a maximum amount of concerns on the NPA front kind of peak, in the months of July and August, when you saw hefty corrections all across in the banking space. And a lot of these banks are, gradually inching back and coming back to their previous highs, especially the private sector banks and so on and so forth. So I think there is that bit of optimism is also built into the prices back again. That the worst is over, and things will only get better from here on. But I do not see, given the prices of any of these banks having maybe there might be stock specific private sector banks which will continue to do very well, but I do not see them running away from here, because the path back is not going to be a V-shaped path, and you've seen a V-shaped recovery in a lot of these banks from the kind of prices that they traded at. So I think from here on, if you ask me, the gains are going to be capped, and they will probably trade more in a range, at least in the next 3 to 6 months.
Nitin, has ITC corrected enough? Is ITC attractive again? It is no longer at 380, 390. In fact, it is at 320. So the P multiple for ITC from its peak has corrected by about, 25%?
Sure, and it's yet not cheap, but that's the way ITC is. So I think ITC is a kind of stock where the moment you start hearing about tapering and you start hearing about risk averseness, you will start seeing these kind of stocks coming back and see people again jumping into the safety of these companies. For us, at these kind of valuations, none of the top line FMCG companies looks anywhere remotely value or cheap.
We're identifying some of the top stocks that you can watch out for in tomorrow's trades. We've got Pranay Jain standing by from our research team with a lowdown on what the dealing rooms are advising. Pranay.
Well, the markets are in a correction mode punctuated by trading up moves, and according to dealers, there are no clean trades to be taken over the medium term. But one stock that they're recommending to sell is Thermax, and they expect it to descend to levels of about 650 soon. Now, the management conducted an analyst meet in which they said that the macros still remain weak and they're not seeing any significant signs of industrial capex revival. Also, the industry is operating at suboptimal utilization levels, and they're not seeing any pickup in the order inflow either. It remains a buyer's market largely, and therefore the payment terms remain squeezed. And the stock is looking rather expensive after the 25% run-up over the last 3 months, where it clearly factors in all the earnings in the current challenging business environment over the next 1 year. And therefore, they are bearish on the stock as they see no upside catalyst towards the order inflow or margin improvement. On the other side, you have HCL Tech, which has been altogether a different story. It has been on a one-way street upwards, where it managed to hit a lifetime high in trade, and institutional desks too are indicating of aggressive accumulation. Most of the analysts we spoke to are positive on better than peer margin expansion due to its superior cost to revenue ratio, and despite the rally in the stock, the valuations still appear attractive at 12.5 times 1 year forward earnings.
Sandeep Agle, what are your top ideas for tomorrow morning? How do you propose a trader should allocate capital?
Nikunj, I would start with a sell in a Tata Motors. You gave the reasons, the Brazil effect or whatever that was, and I see that in the price. I would sell it with a stop loss of 384, target of 370 on the downside. Probably if that is being broken, that can even go down to 360 or so. So very clear 3-4-5% downside. The second call is a buy in a Dabur, which has shown traction and which has almost closed at the high of the day. And safety-wise also, the safety factor is also high in Dabur. So I would buy that with a stop loss of 167 and a target of 176.
Nitin, what is your view on the overall cyclical basket? Because most of the investors are now sort of turning towards this space. Do you think that it could perhaps lead the next leg of outperformance?
Well, it always could, and it has in the recent past. And but you must factor in one very, very clear thing, that the scope for disappointment can be huge, because this is not going to be a recovery which is going to be a kind of a V-shaped, or as I mentioned earlier. So the recovery is going to be more slow and back-ended. So you could have a rally based on optimism. I think a lot of that is already built in to a large extent. So I would be a little cautious.
So Nitin Raja, give me one large cap stock, one mid cap stock, and now that small cap stocks have also started appreciating, give me one small cap stock as well. So Nikunj, the ideas that we have on the mid cap space is, to begin with, is a company called CARE, which is the second largest rating agency in India, just after CRISIL.
It's a great business, throws out 100 crores of cash every year, pays off 67% as dividend to shareholders. In fact, it pays off almost 6 rupees a quarter as dividend. So trades at about 3.5% of dividend yield at this level. We think it's a great way to play the revival in the economy, because as the business picks up, ratings are going to pick up, and so on and so forth. So, and it trades at a discount to its peer group. Among the small cap space, a stock that we like is a Treehouse, education. It's in the the primary education space. Follows a very different model to its peer group, who are more franchisee oriented. These guys have their own schools that they run for children, and having built out a sufficiently large base, and they're growing at adding about almost close to 100 schools every year. They've now ventured in the last few years into the higher secondary education segment, where they now have over 18 schools going to 24 schools. You're going to see economies of play out. You're going to see earnings growth play out at 35 to 40%. The large cap space, we continue to like Tech Mahindra. We think it trades at a discount to its peer group. The business change that we have seen is panning out beautifully for this company, and I think just as you're talking of HCL Tech, we think this stock is going to narrow the valuation.